Hi guys, so this is the final series, and the name of this series, big word that I like to use. I always tell you guys about the big word. It's called Confluence. So this is the first Confluence video that I will post up, and but it won't be the last because that's what our live sessions are going to turn to now. Our live sessions that we now have due to all this being posted on the website is now going to be Confluence. We're going to be analyzing and looking for potential traits together. That is our that is what class is going to be about now. We are analyzing and looking for potential trait setups, and I'm answering questions and stuff like that. So live sessions going to be after Confluence as well. So this series here, you all are going to get this on the live sessions every day, right? So let's get into it. So this is goal, and as you guys know, don't pay attention to this. I was using my dog laptop here. I find his colors was nice and you know kind of blended in with the presentation. So I just want to keep everything on now, one vibe. So yeah. Um right. This is goal on the H4 chart. So you all know that H4 chart goal, all pairs, this is a chart that makes the most sense to me. This is a chart that you pay attention to. This is the most important chart, in my opinion, for intraday opportunities. How we are going to be traded, right? And what is that? That is entering trades, holding for hours, sometimes minutes, hours, couple hours. It even reach to couple days. You'll see how we don't do it, right? Leaving runners for that long. Um. So yeah. So let's start from the top. So I'm going to delete everything, and we're going to start with a clean chart. Right? So goal H4 chart. All right, so what's the first thing we're gonna do? Well, we're gonna identify our key levels. So what are the key levels? Well, for you to reach here, you're supposed to be making your notes from the other modules, right? So go back to the key level module, which is module one, right? So if you do not know what a key level is and you're here, please return to the first video and then come back here with all due respect. Right, so key levels 2850, key levels 2825, key level 2800, key level 2775. So these are the levels that I'm going to use. But this is closest to where price is, so these are the most relevant right now. So now let's observe some support and resistance that we can see easily here. And I'm going to use the rectangle tool for this because I use the lines for my key levels, right? So rectangle tool. So this is a support and resistance I can see right here in my face, right? There's rejections to the top here, and then there's rejections at the bottom here. So support and resistance in one. And these are, to me, the most relevant of the both. You see the areas where they do both, to me, that's more powerful. So that's another example here. Support and resistance. And we'll be coming here. Look, some support. Right? Was it resistance? Well, if we pull it back, Not fully, but this area, you can see this area is somewhat important as well. Prices touching here, prices also rejected here. And what's this? If I just put the number in here, that's supposed to be, which is the key level. Oh, wow, 27, 25. Is it a coincidence that that is the support and resistance? It's not. Key levels are support and resistance. That's why I could draw it on the chart without even looking at it. That's the relevance of the numbers. So this is key levels and support and resistance. So what's the next thing that we're going to do? Well, the next thing that we're going to do after that is find the market structure. Well, pretty easy. This example, bull uptrend. So what should you be doing most of the time? If not all the time, you're supposed to be buying. Right? You trying to sell is going to be much harder than you trying to buy in this case because you're just fighting the price action. Now, at times I would send some of that in the group, but that's really not the right thing to do. Anyways, so market structure. So I like my arrows. Right, so look at this low point here. And then it made this high. And then we got this high low. And then we got this high high. And then we got this high low. And then you got this high high. And then you got this high low. Then we got a high. Then we got this high low. And then we got a high high. And here is where some people will get confused and said that this was a breakout structure and we going down, right? Let me tell you guys why this is incorrect. So this was a breakout structure on a smaller time frame to get small buys, yeah, but us who's trading the bigger picture, this here was not a breakout structure of this. This is simply just the retracement, this overall retracement here that's happening here. This is actually support. This didn't break. This is acting as support. So you can see it's above the key level. That's the significant there. So this is actually support too to catch buys. Right? So market structure at a pair point. When we say we're looking for breaks, we're looking for clean breaks. So this is in line with this wick. This is not a break. We want to see it break completely for it to be a shift. That didn't happen. Right? Then the market continued giving us high highs and high lows. So going back in, high, low, higher high. Then we got high, low. And then we got a high high. Then we have another high low right here. Then we have a higher high here. And we don't know if this is gonna stop here because we can get a bearish candle yet. Only when a bearish candle is formed can we say resistance is starting to form. Right now this could just continue pushing. So we're anticipating higher high, whatever it may be, and then we're looking for a higher low. So this example that I'm giving you all here of Confluence, this is actually live analysis as well, because I'm showing you all the Confluence, how we caught these moves. But what I'm gonna do is trade the next move, right? So this is what I'm looking for now. So seeing that this is the new form support here, I'm waiting for support to form. Rather than trade the counter trend down, I'm gonna wait for, and look what I'm gonna use here, the arrows. part, right? So I'm looking for this, something like that. So I just trying to get this to look like what it's been doing here. It's been doing the same thing here, right? So market structure, and then I pull my fibs. So we have key levels, support and resistance. We are getting the market structure, right? And then we have fibs. So what are we looking for now? We're waiting for that candlestick pattern and a lower time frame breaker structure. So let me show you an example of it in the past. So an example of it in the past, let's say, let's use this area here. After the market made this high, formed resistance, sold down, and it found that support, and we know that by the bullish candle. Look at the formation that created on the H4 chart. So this right here, let me zoom in so you all can see, right? I should be able to see that, right? This is an example of a morning star. You have the bearish candle, then you have the doji to the bottom, and then you have the bullish candle. So upon seeing that at the higher low, where the key level is above the key level, with the higher low. So now we have to go in lower time frame. So 15-minute chart, this is the area that we're paying attention to. This is what I mean by lower time frame breaker structure. So following this here, on the lower time frame, the market will gain up these lows, lower highs, and pushing lows. And only at this point where the market came back up, at this point still lower highs, but it's failing to give you those lower lows. So not breaking this low, so this is a higher low, and then you still get that play around high, low, and this confirm it. So this is the lower time frame breaker structure that I'm talking about. This shift back. So the price action is back in your direction long term. This happened from the lower time frame. And this lower time frame breaker structure happened after the candlestick pattern that we formed on the H4, which is here. Right? So, alright guys, so I think this is the area that we was watching here. But all in all, this is how you do it. Right? You draw your key levels. Alright guys, so just to get back to train on top, key levels. 3K650 highlighted, right? Support and resistance value around this area. If the map will see relevance. Right, so we have support and resistance, and we have key levels. And you also with support and resistance, I use that area rather than a line. So in market structure, we already identified as uptrend. Then we got the candlestick pattern. And inside the candlestick pattern, inside the candlestick pattern, we have the lower time frame breaker structure, where you saw the lower highs and lower lows being changed to a higher low. higher, 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 higher. You're back in the direction that we're looking for. So the type in data structure and candlestick pattern. So that's an example on goal on putting it all together. So let's do an example on let's do an example on Euro US. So this is Euro US. So let's do an example of the confluence on Euro USD from the top. Alright guys, so starting with the key level. That's one. Maybe the 100 pip ones first. That's two. This is three. Sorry. And I just make sure that you're sitting followers. And we put one more because our prices. Alright, so those are the 100 pip levels. I'm now going to pay attention to 50 pip levels as well. So I'm going to use this one. The prices are above. We'll change the color to blue. And then I'll do 50 pips higher. So now I want to do my support and resistance and run. You can see a gap here. And the gap is just, it had some news over the weekend with the tariffs that Trump posted and stuff like that. So the market opened with a gap because fundamentals impacting market. So this is like a big bearish candle, I would say. Um, Now we look at the support and resistance, right? So watching over here, we have some support here. But it touched here and it made resistance underneath, right? We have another one at this key level here, right? So see now the key level, and we have some support and some resistance here. This could be an area that the market wants to sell from. So broke past, and now it's an area that market will look to buy from. So still on the buy side, you then have to figure out the market structure. Based on this structural level that we're seeing here, on the H4, the market was unable to make a lower low. So lower high, expecting another lower low, the market picked up momentum and still making higher highs. This is showing that the trend is looking to go upwards. Right? So you can also see it on the daily time frame. But the time frame it's showing upwards momentum. So This could change with the fundamentals, but as of right now, that's what the market is showing you. So zooming in on the 2 hour, let's do some market structure. So we have some lows. Then we have highs. Then we have lows here. And then we have highs. When we make a low, that's lower than the previous one. So higher low. Highs again. So market broke past and we have highs. So now we're looking for higher low and higher highs. So now that we know the market structure, we have key level support and resistance. We're gonna measure the Fib. Um, the last Fib that was used is on our chart. Would have been when the market made this higher low, trade this higher high. So it would have been bullish, bullish. And we have seen the market creating this move, right? But check it out a little bit to go again. So you can expect continuation to hit the point and then a higher low to go up again. Right? So that's for the Fibs market structure, support resistance, and then we'll be looking for lower time frame breaker structure, candlestick pattern. Currently this is a kind of candlestick pattern here to probably take buys from to continue to move, but it's kind of high. So let's I want to use a different example, and the example that I would use is in this way. Going into as low as the 5 minutes, you can see on the 5 minutes where the structure is beginning to change here. So it was going down and then formed that higher low, you start to get some rejection candles and then the structure shifted here. So even if you didn't take it here, after it make this and give it this higher low, you could have taken it around here, right? Lower time frame breaker structure in the candlestick pattern that we saw as well. So that's basically how you put it all together from key levels, support resistance, market structure, pulling a fill, lower time frame breaker structure, and candlestick pattern. So we got two examples. And anybody unclear, well, know we're going to be going through this over and over and over and over on the live sessions every day. So with that being said, thanks for completing the advanced series of people strategy and see you in class.